Givney, got Sam Givney, the executive director, and we've got Shayla Seymour, the commission coordinator. So I think that I've covered the support staff on the line.
All right. So I'm going to share my screen. We have a PowerPoint that we'll be going over.
Are you going to introduce the?
Yes. With me today, I was in charge of the audit, and with me today is Brad White, who is the Team Spokane program manager, audit manager, and he's also the program manager for counties. And then Bill Ventris is the assistant audit manager who supervised the audit. And that we will be the three representing SAO for you today. And Brad will be leading off the audit. And everyone can see the presentation?
Yes, we see it.
Yes.
Perfect.
All right, so nice to meet all of you. I think you're aware that typically our Team Olympia audit team would be doing your audit. For this audit, they didn't have the capacity to be able to get to all the audits, and we had some extra capacity on my team. So we offered to do this audit for them. So that's why you're having an audit team from the other side of the state that we don't typically work with you, but it's been a pleasure getting the audit completed. So Heather did introductions, so you can take us on to the second page, Heather.
All right, why is it not moving? Oh, there we go.
All right, so on the first page there, you'll see the picture of Pat McCarthy, who's our elected state auditor. Some people may be familiar with her. For those that aren't, we kind of put a face with the name. And then we're talking about three areas that are most important to Pat. So she came from local government. She worked at Pierce County. She was the Pierce County auditor. At one point in time, she's also worked on school boards and other local government type of functions. So she really sees it as something that's important and it's personal to her. So one of the things she's hoping that we can help do is increase the trust in government. The last couple of years, I think that probably state and federal government, we may have lost some trust as a state or nation with all the things going on. But from our perspective, we think that local government does a really good job, and Pat sees a lot of good in local government and sees that, for the most part, local governments are really good stewards of tax dollars. They're protecting the interest of the citizens. So we want to highlight that through a lot of our audit reports and other functions that we do, so the local government can be seen as something that can be trusted by the citizens. Secondly, she sees that the way that we do that is through independent, transparent examinations. So through the audits that we do, we're able to hopefully show that there's things that they can rely on when it comes to the local governments. And then third, she hopes to do that through improved efficiency and effectiveness of government. So this is through not only audits, but we have other parts of our government or of our agency that effectively do this. So I'll talk a little bit later about the Center for Government Innovation. So there's someone that helps improve on lean processes for governments. We also have the Performance Center that does a lot of different kinds of things. So, we're doing audits. They may look at how's nutrition looking at schools and how are those things that can be improved and those sorts of things. So we're doing a lot of different things with the state auditor's office, and she's hoping that we can help just in general with the state, and we can help highlight the good work that all of you are doing. All right, I'm going to hand it over to Philip, and he's going to go through your accountability audit results with you.
Okay, so for your accountability audit, the opinion on our audit report states that port operations complied in all material respects with applicable state laws, regulations, and its own policies. So this is a clean opinion. This is what you want to see when you're reading an accountability audit report. And this report also goes on to describe that, consistent with general auditing practices, that we do not examine every transaction, activity, or area. There's not enough time in a day to look at every single transaction that an entity does, but that also that we don't provide information on areas that we didn't review. So this is only what we looked at, and it's only the results for the areas that we reviewed. Next slide. So the areas selected for the accountability audit were determined using a risk-based audit approach, which involves planning procedures at the very beginning of the audit. So this includes reviewing board meeting minutes, reviewing vendor and financial trends, as well as inquiry with staff. And based on those procedures, we determined that the bulleted items listed here were the areas that we wanted to focus on. So I'll go over the areas that are a little less obvious, starting with accounts payable, electronic funds transfers. So for this section, we looked into policies and procedures that the port has for making changes to banking information on electronic payments. There has been instances throughout the state where phishing attempts have been successful in baiting employees working in accounts payable departments to update routing and account numbers for payments the district normally makes, but with alternative banking information that would then route the payment to the person attempting to make the phishing scheme. So based on our review of this section, we noted that the port had adequate internal controls over the area, and there was no major concerns. For the payroll and leave balance accruals, so for this area, we looked into the controls that the port has to ensure that employee leave is accurately tracked and monitored in accordance with the port's policies. We also selected and tested employees to ensure that they were accruing the appropriate amount of leave, and when they used leave, that it reduced their balance. We also noted that the port had adequate controls over this area. For the accounts receivable, marine terminal and airport, we reviewed this section to determine if the airport landing fees and marine terminal fees were being accurately charged based on the approved rates for the port. We then selected transactions and tested to make sure that the billings were accurate and supported. And we noted no concerns in this area. So honestly, really good job as far as the billing standpoint when we got into this area. Also, compliance with state grants. So this section involved determining what type of state grants the port received. And then based on the grant agreement, we determined the compliance areas, the compliance requirements related to the program. So based on that review of the district records, we identified the Department of Ecology grant. So this was the Cleanup Remedial Action Program. We reviewed for allowable costs as well as reporting requirements and didn't have any concerns with those areas either. So I'll turn it over to Heather to go over your financial results.
There we go. So our audit scope is the same as the accountability of January 1st, 2020 through December 31st, 2020. And in that first big blue square, unmodified opinion is issued. So that is what the opinion that you are wanting to get. And this will also, in the exit packet that I provided, this matches and goes along with the draft audit report, which is pages 13 through 19 in that packet. So our opinion is issued in accordance with US GAAP because you are a GAAP entity, and it's also conducted in accordance with government auditing standards. So, and then the second part is the internal compliance, internal control and compliance of financial reporting. So we identified significant deficiencies in internal control, which is related to the finding, which we will, I'll be going over shortly. But we identified no deficiencies that we considered to be a material weakness and no instances of non-compliance that were material to the financial statements of the port, which leads into it being a clean opinion. So we do have required communications that we have to provide. So uncorrected misstatements that have been provided for review, they're provided through the management representation letter, which a copy of it is in that packet on pages pages 20 through 24, and then it's also on pages 2 to 3 of that exit document as well. So these are items that we identified as errors, but the port decided to not correct them in the final version of the financial statements that will be published with our report. Secondly, none of the misstatements that we identified were material and that had to be corrected by management during the audit, which that also goes to that clean opinion that I was referring to. So as I was saying, we are issuing a financial statement preparation finding. So the title of it is that the port lacked adequate internal controls or preparing financial statements to ensure accurate financial reporting. So basically with that, the finding is pages 8 through 11 of the packet. During our audit, we identified multiple errors during our testing and review that the port either corrected or did not correct. And that is all identified in be in that finding in the packet. Is there any questions about, anybody have any questions about the finding itself?
I have a question.
Oh,
Well,
yep. Okay.
Thanks, Heather. On it, I'm hearing two different things. I mean, one is you're giving us no material findings, but then when we get to the financial statement preparation, the language sounds pretty serious. Like the bottom of page 8, this issue was reported as a finding in prior 3 audits. That sounds
Yes.
pretty serious to me.
So there's a difference between a material misstatement. So materiality is based on amounts, and we take the financial statements and look at materiality that way in aggregate. So none of the errors individually or together were material, but we determined that there were enough errors that were identified as part of the audit that it was an internal control deficiency, which is what we can, and so that's why there is a finding. So there's nothing, we didn't identify anything material, which is what that was saying, and why you still have a clean opinion. You can have a finding and still have a clean opinion.
Okay, so in everyday language, you would say that the financial statements do not match up with other financial information. So the financial statement is a accumulation of a lot of data, and somehow that data is not coming from the, you might say, the individual business units to the rolled up financial statement. Those numbers are not being carried through somehow.
Not some, not all, because if we found it all, then it would be a bigger, so we found a lot of small issues that together. And so in like, basically under the effect of the condition, it basically of a finding, it talks about individually of what we found that were misstatements and what didn't carry through from the supporting, because that's basically what we do is look at the supporting documentation, both it being the general ledger that the port keeps and third-party documentation like the county treasurer documents, the actuary or Office of State Actuary OPEB reporting tool, and other support. We follow that through to the financials to determine if they are correct. So some of the testing we do, because we, like Philip mentioned, what we do, we don't look at everything. We can't look at every single transaction, every single amount. We have to select balances based on various factors. Materiality is one of them, of what makes up the biggest amount of your financials. Also, what's most risky. You know, if there's things like cash is usually always going to be selected because that's a big risk factor to be looking at. You know, if cash is missing, that's a big deal. So basically, yeah, that effective condition lays out all those different things that we identified during the audit that were incorrect based on our testing. And then the uncorrected is what we identified and communicated to the board, but the we're not corrected for that final financial statements that will be published with our report. Does that make sense?
Yes, it does. Thank you.
Okay. Are there
And
any
also,
other?
I would just want to point out that Heather brought this to the attention of the port, and they had an opportunity to correct each one of these. And we don't tell them necessarily how to correct it, but we were just bringing it to their attention that it doesn't agree to the supporting documents. So each thing had an opportunity to be corrected before the end of the audit.
Okay. Any other questions regarding the finding? All right.
Yeah,
Oh,
go
yep.
ahead, Commissioner McGregor.
No, go ahead. You were first.
No, you go on ahead.
Okay, well, I just had a question on the slide with the 2 blue boxes. You had
Oh, yes.
significant deficiencies versus, and then material weaknesses. Can you kind of explain what you mean by those two and what are the differences?
Oh.
Sorry.
Brad or Phil, do you guys want to?
So a material weakness, typically, if it's material to the financial statements, that would be 10% of the overall expenditure. So when we plan an audit, we develop what the materiality level is. And then when we find errors, we look at those to see, would those be material? And so in terms of with accounting and reporting, if there's things that are material, then in accountants, we basically say, this could be misleading to the reader of your financial statements if there's material errors. So that's where when Heather was explaining that we did have numerous errors, but since they were below that material weakness level, so we still have to issue a finding, but we are able to issue a clean opinion. So in an instance where, let's say we had, sometimes I've had a few instances with clients where maybe they had some material errors. If those still existed and weren't corrected, then we'd be unable to issue a clean, unmodified opinion. We'd have to either have a qualified opinion or we'd have to have a different opinion that would basically say it wasn't a clean audit. So part of it too is when we're looking at the internal controls, when we find there to be significant deficiencies or material weaknesses, either one of those, we're identifying that there was enough concern with the controls that it could have led to material errors. It ended up that it didn't. So the good news is we were able to issue that clean opinion, but it's possible there could have been larger errors caused by the deficiencies that we found.
Thank you.
Commissioner Zeta?
Yes, so let's see. I want to thank the auditor for doing this audit. It is indeed important to have a close look at the port's financial practices for public trust, among other things. And I want to thank my fellow commissioners for your good questions. I had some similar questions. So what I'm understanding from the auditor's office is that material errors would be big issues, more than 5% of expenditures. Is that what you said, Mr. White?
10%.
Oh, 10%. Okay. And while you found significant deficiencies in internal controls, you did not find material errors. Is that right?
That's correct.
Okay.
Yeah.
So I have a question about that because I read the report and on page 3, there are misstatements in net operating income, in cash flow, and so forth. For example, there's a misstatement in operating income that's $4.5 million.
So
Hold on,
sorry, go
I
ahead.
just want to read through these and
Yep,
then
sorry.
I'll
Go
welcome
ahead.
your explanation. There's a misstatement in reconciliation that's $6.5 million, and there are problems with the statements of cash flows that total about $2.3 million. Those seem like material errors because they're bigger than 10%.
So when we're talking about 10%, we're talking about 10% of the total expenditures for the financials. So taking them all together, yeah. So when we look at that, it's still, and even though I agree, they look like big numbers, but in terms of the port's financials, they are still not considered material. They're still under that threshold that would not be considered material.
Well, for example, our total budget is on the order of $14 million. And if our cash flows are misstated by 2.3 million, that's more than 10%. And the other two items are even bigger than that, 4.5 million and 6.5 million.
So
It's also compared by which statement you're talking about. So a balance sheet item has a different level of materiality than an operating statement item. So as it relates to the balance sheet, that's based off of total assets. The materiality is about 13 million. is how we have it
So-
calculated.
Oh, I see. You're basing it on the total assets. So since we have assets of over $100 million, in fact, our
The rest
if
of
you
the,
add our depreciable and non-depreciable and capital assets, it's about
Mhm.
200 million.
Mhm.
So it would have to be really high. So the fact that
Yeah.
we have misstatements of 2.5 million in cash flow, 4.5 million in net income, and 6.5 million in reconciliation, those are big numbers, but they're not material.
Correct, to the balance sheet. So those numbers are reported on the balance sheet, and that's what they're being compared to. So if it was like a revenue or an expenditure error, it'd be compared to the operating statement for the port, and that would have a different threshold. So
of
Okay.
revenues or of total revenues or total expenditures.
Okay, that helps me understand what you're comparing it to the over $1 million in port assets. But it's good for us to keep in mind that we have multi-million dollar errors in several categories.
Mhm.
Thank you.
Yes.
Thank you.
So
And it-
Heather, are we
Yep.
moving into the Q&A? I don't want to belabor anything. If there's
Okay.
more presentation, I do have another question though.
Okay. So, sorry, did you want me to, were you wanting to say the questions until the end?
Well, I mean,
Or do-
depends on, I mean, it's your meeting, so
And
What would you
we're fine with that, with questions as they come up. That's fine with us.
well, we're looking, okay, therefore, we're looking at page 10, you have recommendation. And we recommend the port strengthen its internal controls and dedicate the resources necessary to ensure its staff is adequately trained to prepare and complete financial statements in accordance with GAAP. Additionally, the port should conduct an effective, independent financial review that ensures the required financial statement package is accurate and meets GAAP reporting standards. So do you find that the port does not have that, and we'd be well served to have an
I
independent?
wouldn't say that it doesn't have it. It's that it's not an adequate, or that additional, that the staff preparing the financials didn't, from the errors that we saw, could benefit from additional trainings. It's not like they didn't have knowledge or abilities. It's that they need more. Just because based on the amount of errors we identified, and that the review should be more complete, because what our thought is that an adequate review should identify and detect these errors before these financial statements are ready for audit. So when all these errors should have been identified and corrected by the port before the audit started.
Like one example of reviewing for the errors is the inconsistencies of amounts reported between the statements and the notes and the schedules. So if you have an amount reported for district cash, for instance, on the statement of net position, that should equal the amount of cash that's being reported in the notes of the financial statements. Yet we were finding that there was discrepancies. And then when we go to test the amount to determine what the reconciled balance should be, that was a different number from both of those numbers. So those inconsistencies could be caught at the district level or at the port level before the financial statements are submitted to the state auditor's office. So.
And one last related follow-up question.
Mhm.
We're talking about the end of year financial statements because as you know, we get quarterly financial statements. So is the year-end financial statement the most important one that actually goes to the auditors?
Well, in our thoughts, I mean, that's what we audit to. So that's what our opinion is going to go off of is we don't look at the quarterly.
Okay.
That's a management port decision or on that. But I mean, my expectation with that, those would roll forward into the final, but we're not going to be doing any testing and looking into that.
Okay, thank you.
Any other questions? So, any other questions about the finding? Okay. And so as part of our published report, we do include a summary schedule of prior audit findings. So This is the information from the finding from the last audit that was issued for the 2019 financial statements. So we fill out the top part of it of the audit period, the report reference number, the finding reference number, the caption, and the background. And the port provided us with the status of the corrective action and the action that has been taken to correct the prior finding. So within that, so the port has reported that the status is partially corrected. And as I said, it stated that corrective action. And this will be included in our audit report as part with the financial report as such. Any questions on that? Okay. And now it's back to Brad.
Okay, so one of the things that we've implemented is something called Tracker. This was something that the state auditor saw as a need for local governments, because when there's something issued like a finding that we're talking about here, the public may see that and may be interested in, what are you doing to resolve that finding? So it gives you an opportunity to go in and put information about how you're resolving it. So kind of a simplified explanation for it is, let's say we had an audit issue where you didn't have a policy in place, and then a month after the audit was over, you were able to put that policy in place, perhaps pass a resolution. You could go into Tracker and indicate that you did these things to resolve it. And then your audit team would look at that, see that you added that, and then they could add something as well that they also saw that this was resolved. So you're able to sort of communicate to the public that way that you have seen this as something that was important and you took the opportunity to resolve it. The other things that they see as something that's valuable with that is if you have turnover, it helps the new person get up to speed more quickly, as they could see all of the audit issues from the prior audit and sort of what took place. And they can better and more quickly prepare for the upcoming audits. Also more easily identify and resolve those issues. So that's something that you access through your client portal, which is where you would go to submit your annual report each year, ask help desk questions, that sort of thing. So on to the next slide. So just some closing remarks. So the audit cost would exceed our original estimate. With the financial finding and the various corrections and things we worked on. So when we do the budget at the beginning of the audit, that's sort of with the expectations. We didn't have any significant issues we identified. So with the issues we identified, it took additional time to complete those. And so all those costs are in your audit packet. And then also it talks about that the next audit would be completed in 2022. This would be for fiscal year 2021. It would be the accountability and financial statement audits, and that estimated cost is also in that packet. Next slide. So report publication. So Heather will document, that we had this exit today, who was present. We do a few sign-offs, and then I let Olympia know that these reports would be ready to be issued. And then it takes about a week typically. So I would guess sometime next Tuesday, somewhere around there is when the reports would officially be published, which then means they're on our website. So they're basically a public document that anyone in the public could look at. It also has like the prior reports on there as well. As part of that is when the published reports go out, there'll be an audit survey that goes out to selected members of management. So just if you can fill that out, if you get that email, that helps us know how we're doing. Anything you see that we could improve on, that's always valuable information for us. All right, next slide. And then a couple things about working together to improve government. So the local government support team, I had mentioned the client portal where you submit your annual report. So that is the local government support team. They're not part of the audit function. So for us, once you submit financial statements, if we find errors, then we have to report on those as we're talking about today. What's nice about them is as they're not auditing you and you'd be working with them prior to the audit taking place, they can answer more questions than we can, as we have to maintain our independence. They also help with, sometimes when you go to submit things, you'll have red flags or yellow flags. They can help with that. Also, they provide different training on submitting financial statements, FARs updates, that sort of thing. And then the Center for Government Innovation, they're paid through tax dollars that we all pay already. So there's not an additional cost if you were to use those. People use those for different process improvements. They also put out free resources, tools, and best practices on our website. They developed the financial intelligence tool or the FIT tool. If you have any interest in working with them, you can contact them at that center at sao.wa.gov. They're happy to just set up a meeting, even if you're not sure exactly if you'd want to do something with them, but maybe just to learn some more about them. Next slide. And then finally, this is just a thank you. We thank port officials and staff for making every effort to provide us with the requested documents timely. We know an audit is a long, difficult process, especially when we're trying to do things remotely. And so we just appreciate you doing everything you can to work with us to get this audit completed. And then last slide. So this is, if you have any more questions, we have this opportunity for that. It has my contact information on there. You're definitely welcome to contact me. The port or the team Olympia would be doing your audit in the future, so you can also contact that team, but we have all our contact information in that exit packet if you have additional questions about this audit that we performed or anything about that.
Thanks, Brad. I got one more question for either you or Heather, if I may.
Yes.
On page 1 of this report, status of prior management letter items, there was an item called Port created a change order for ongoing service contract to complete an unrelated drainage pond project instead of competitively procuring the project. So, and then it's the X is on unresolved. So is there something more we have to do with that, or can you tell me that that's resolved?
When we were inquiring during the beginning of the audit about change of public works projects with change orders, we were told that there weren't any that had any. So because we can't test it, we can't call it resolved. So that's basically what it is that we'll put a note in our future audit work file to look at that in a future to make sure to do some testing to make sure if it's resolved or not. But at this point, because we didn't do any testing, we can't say one way or the other.
Okay, so the port would do well to make sure we've corrected that deficiency. Yes. Okay.
Yes, please.
Thank you.
Any other questions?
Yes, I have some.
Okay.
So you've noted that these issues have shown up in our last 3 audits. And you've identified this as a management issue, that staff need appropriate training and resources. And that all makes sense. And I want to assure the public this is not due to any individual staff member in finance, because we've had a lot of turnover since we lost our CFO a few years ago. So this is something for the Port Commission to discuss after this meeting, is the virtue of having a CFO for consistency and oversight. You have pointed out other concerns about our finances in the past. For example, our net position sufficiency has been chronically low. That is, the number of days that we can fund with cash on hand should be 60 days, but it has usually been lower. And I see that's not in this report. And I understand that your scope in this report is limited. And you'd also flagged our debt to income ratio as being too high in recent years. Are those things that would be looked at in the 2022 audit?
So as part of this audit, we did look at financial condition, which is where those ratios would come from. And so basically, as far as I'm aware, and I know Philip looked at did the part over the accountability audit, that there were no major concerns over those ratios. So nothing that we didn't see any cause for concerns during our review.
So I'm sorry that I missed those in the report you provided to us.
So, so basically, if there's no reportable issues, they won't be included in the report. So as part of the accountability report, we include the list of sections that we're looking at. And if there was a management letter, that would be referenced in the report. And if there's a finding, that would be included in the report. Financial condition, when we tested, didn't have either one of those. So basically, when we did our testing, there was no major concerns for that when we did our review.
Yeah, so this was reviewed during our audit, but there wasn't anything that would cause us concern to have to issue an exception related to it. So how you were talking about your debt load being in excess of 12%, that's a benchmark that just prompts us to start asking some questions. That's still the case at this point in time when we reviewed the 2020 audit, but there wasn't, based on our follow-up, there wasn't any concern that that's going to be a going concern issue for the board.
So our debt load has been more than double that in recent years. And,
yeah.
And if you have done that analysis, I think we would be grateful to see it if you could possibly share it.
Yes, not a problem.
And it would also be useful to see our net position sufficiency. I appreciate that the SAO shared a chart of how our net position sufficiency has changed over the years. And if you just have this year's update, we can add it to that. You don't need to provide the chart. You don't, but if you have this year's numbers, I'd be grateful to see those.
Do you want me to just send that to you, or would you like me to provide that to Shayla and she can
I'm
send
sure
that
that
to
all the
whoever is
commissioners,
interested?
I think
Sorry.
all the commissioners would probably like to
Okay.
see that. Yeah.
Okay, so I don't have all the contact information for all the commissioners, so I'll send it to Shayla and she can send
Thank
that out
you.
to everybody.
That's great. Thank you.
Perfect, not a problem.
Something else to add, just so when we look at financial condition, we look at all the different numbers and sort of look at it as big picture as a whole. So for example, the days of operating expenses is a pretty good indicator if there's a significant concern. So for 2020, you had 296 days, and our benchmark is we're hoping to see greater than 60 days. So it's quite a bit higher than the benchmark. So if we see a client that has less than 60 days of operating expenses, that becomes a pretty significant concern. And then looking at something like operating margin. So for example, yours is 35%. So we didn't see a concern there, but we did have the one as a potential, like a flag of like the debt service. So we look at that compared to all the other different areas that we're looking at for that. And so overall, we saw that we felt like overall it wasn't a significant concern. So a going concern would be if we felt like you couldn't operate, you may not be able to operate for a year, more than a year, because we have some significant financial concerns. So it doesn't mean there aren't things that you could choose, as an entity to look at and say, maybe we could do something different here. But we didn't see anything that we saw as a significant red flag for your overall financial condition.
I'd also include too, is that if there's an explanation, reasonable explanation of why something is below the threshold. So for like debt load, you have more debt because you're doing construction projects, then we would take that into account. Just because you have a negative, or don't meet a threshold doesn't automatically mean there's an automatic exception there. We look at what the explanations or what the port's doing overall as well. It's not just whether you meet that ratio criteria or not.
Any of those analyses you can share would be great. Commissioners have limited information about port finances. We did get an analysis of the crane, which was purchased many years ago, and learned that it's considering the debt and the low use, it's losing about $500,000 a year. But we have not received analyses on other things that we've asked about. So any information you can provide is useful to us.
Okay. Any further questions or comments?
If I might, I'd just like to thank the auditor's office for your diligence and what you provide in the service to government agencies and entities such as the ports and other special purpose districts in your audits. It's always good to get a report to see where we need to improve, how do we need to improve, and the how is probably what we're going to have discussion on. But it's apparent to me that we do need to do some additional training with GASB and GAP and all of those types of things to make sure that our financial administration knows the best ways to report things, and it's all a learning process. And as Commissioner Zeta had said, we've had somewhat of a fluid financial area in the port, but hoping to improve that over the next coming years. We've got some excellent people in place, and I think it's just going to be a training opportunity to enhance their training so that when the next go round comes around, we'll see even better reporting and working with the auditor's office on fixing some of these things to make them more than just adequate. So appreciate your time and efforts, and I really appreciate the presentation today. Thank you.
You're welcome. Thank you.
Hey, I'd like to echo Commissioner McGregor's sentiments and Commissioner Zeta. So thank you for this review. I, for one, have learned a lot in this hour. Thank you.
Thank you. So that's all that we have on our side. So we appreciate your time, taking the time out to go over this, and we do appreciate the questions. That shows definitely the involvement the board has into the financial operations. And so that's always something that we'd like to see, the involvement, the level of involvement. So we appreciate it. And we thank you again for meeting with us to go over the results. I know sometimes it's not easy when there's things that are not, when it's not 100% clean, but we have great faith that just in our meeting with all of you and with the finance department that we have great things are to come.
Good. Well, thank you. I guess we'll just bring this meeting to a close then.
Perfect.
Thank you, everybody. Thank you, commissioners and staff for attending, and thank you, SAO, for coming to visit with us today.
Thank you.
All right, thank you.
Bye.